This morning session is going to address cyber liability from a business perspective. We all store digital information about our customers. We use that information to provide service to them, but also it presents to us some risk from some of the folks that you're going to hear about this afternoon. So the reason we wanted to bring these folks in is because we wanted to take a really pragmatic approach to trying to evaluate what that risk is. In the insurance business, it's been a long-held axiom, if you will, that emotion buys it and logic pays for it. So when you think about it, the cyber risk we hear about every day comes in a variety of forms and may be way more complex than we can wrap our head around. And so emotionally it creates fear and may create the wrong buying impulse. So we decided to bring some of the folks who can add some logic to this process. And one of those is Bill Martin from Gateway Underwriters. They were kind enough to A, to help sponsor your lunch, B, put this their presentation together, because what they're going to talk about, they operate very much in the same way we do at the Unland Company. We're an independent insurance agency, always seeking the best solution, the best value for our customers. And they do the same thing in the cyber world. Now, Bill may look a little stressed because he was going to have a partner in this presentation who they were going to ham and egg it. They were going to take it on the team concept, but his partner couldn't make it. So he's going to, if he walks to both sides of the podium, he may be changing personality. But we, our hearts and thoughts go out to Warren. His grandmother, I believe, had some issues, and so I'm going to turn it over to Bill Martin, the president of Gateway Underwriters.
Well, thank you, Bill. Great to be here. As Bill mentioned, emotion typically buys insurance, so they wanted me to come in and scare all of you into running to your insurance agent to purchase cyber liability. The first thing that you see cyber liability, that's how this product got started 15, 18 years ago. What I want you to do now is forget about the word cyber, because it immediately draws your attention to computers and hackers, and that is a small portion of what the claims are and what this really entails. As we mentioned earlier, this type of risk, the claims that fall under these policies are expanding rapidly. There's new threats every single day that you wouldn't even think of. So the insurance product is actually the last line of defense. It's how to mitigate and transfer that risk. There's a lot of things that you can do with your IT professionals or separate IT consultants that also help, but it is a multiple prong approach to making sure you have a solid defense against the risks that are out there. So just a couple of things that I want to go over. What is cyber? What is this data security? A couple of claims examples. And then Warren was going to go over, he's a technology underwriter at USLI, so he was going to go over some of their product. At Gateway, what we do is we combine all these different companies. USLI is one of them. There's a handful of other companies that provide great products. So we put all these together, and when somebody like Bill comes to us with a need, we find the best fit for that specific risk. And so I'll talk about some other carriers as well as USLI. But to get started, what is cyber? Cyber generally refers to privacy breach, first party and related liabilities, which are third party. So, again, when you think about cyber, it's immediately you draw upon computers and hackers and getting into a system and stealing information. But really what it is, it's protecting all of that information that you have either from your customers, your proprietary information for your company, and wanting to protect that. So the first exposure is a first party coverage. Those are the expenses that you incurred for the resolution of a data breach. And we'll get into some of those on the next slide, but it does include non-digital exposures such as paper copies. Now, as any of us want to say we're in a paperless world, you look at anybody's desk and you're going to have stacks of papers. You look at, go through any dumpster or recycling bin and there's going to be full of paper, and unfortunately you don't really know what is on that piece of paper that you're shredding. You don't really know where that shredding bin is going or that recycling bin is going. So you have to be prepared to defend yourself against any intrusion on any paper as well. Third-party coverage, those are the lawsuits that occur once a breach happens and somebody is affected individually. Just by a quick survey, I just want to understand where each person is coming from. So how many people do we have that are in the retail industry? Hospitality, restaurant, education, financial, Main Street business. What did I miss? What was that? Great. Okay. So there's different risks that apply to each and every one of you. There's a lot of similar risks that are across the board, but if anybody has any questions about how this may apply to their sector, please stop me and we can go through it. If you have any questions about anything I'm talking about, don't feel like you have to wait to the end. Please raise your hand or just interrupt me and ask your question. So the cyber umbrella, again, it's a large area for claims. A couple of the first party, privacy breach expense, privacy liability, network security liability, regulatory defense fines and penalties, PCI fines and penalties, cyber extortion, website liability, non-physical business interruption, data restoration, cyber terrorism, wire transfer fraud. Those are all types of exposures and claims that can fall under the cyber umbrella. A couple of the big ones, the network security liability, privacy liability, those are what you're going to see as somebody gains access to your system or your files and can steal, PII, which is personable identifiable information, PHI, which is the healthcare information. So then as you go through, fines and penalties, those you have to be compliant with, if you're storing consumer information, you have to be compliant with certain rules and regulations, the same with healthcare. So if you're not, all of that stuff can lead to fines or regulations through government or governing entities. Again, personal identifiable information, private consumer information, including social security numbers, driver's license numbers, credit card, bank account numbers, or medical information. Definition now includes a user ID and password. If you have both of those, that's in California and Florida. What we've typically seen over the lifespan of cyber liability, things start on the coast and move in. So California is usually the first to start a new law or regulation, and then we'll go to the other coast and then hit the Midwest. And so what all of that means, if you hold any of that information, and again, it can be combinations, it could be one, it could be, like in California and Florida, it could be a user ID and password, or anything that can be used to get that information. You are responsible for, protecting it. The personal health information, private medical information, they used to all be set up under the PII. Now they have separated that out because there's now different rules and regulations from the healthcare organizations that require you to protect that information. A data breach is just an unauthorized theft or disclosure of private data, either the personal identifiable information or the healthcare. Expenses, You can look at forensic expenses, notification expenses, credit monitoring, call center, and public relations. So if you look at those expenses and how, if you don't have an insurance policy, that stuff adds up. The greatest asset of the insurance policy is you have somebody to call. It's very different on a cyber liability claim compared to a general liability claim. In a general liability claim, you have to have an event that actually occurred. So somebody has to come and fall down, get hurt, and then you can call the insurance company and say, we had so-and-so on our property, they fell down, got hurt, went to the hospital, can you take over? And that's how that typically works. On a cyber liability claim, you can have the potential for a loss. So if you think, I may have had somebody breach my system, or I lost a laptop, I lost a thumb drive, they can then step in with their policy and say, well, let's go through the forensics and see if somebody did hack into your system, what was on the thumb drive you lost, take me through the laptop, was it encrypted, what information was on there, can I remote wipe it clean? All of that stuff can be done by the insurance company before anything actually happens. So they want to be the first line of defense in case of a claim. A lot of the times what happens with insurance claims, people start managing them themselves before they turn them over into an insurance company. They're afraid of the deductible, they're afraid of the cost. The insurance companies on these types of claims want to be the exact opposite. They want to address it right away, be involved right away, and try and eliminate that cost that you're going to have. So that's kind of how they're set up, their mentality going forward with the handling of a claim or potential for a claim. Privacy liability is a claim or any actual or alleged act, error, misstatement, omission, neglect, breach of duty committed by any insured which results in a data breach or a violation of privacy policy. Network security liability is a little bit different. It's the failure of computer security which results in a security breach. So it's your firewalls, your protective devices failing and releasing that information to the public. Some additional exposures, regulatory proceedings coverage. If there's any violations that we talked about earlier, state laws that are violated because you're not protecting the information or you're not doing your due diligence after a breach has occurred, that can be covered by the policy as well. The PCI fines and penalties. The credit and debit card industries have rules and regulations in place that you have to be compliant with. If you're not, and there's a breach, you can get reimbursement for those. Cyber extortion. This is a newer take on extortion. What they're doing now is stealing information and stealing trade secrets and calling you on the phone and say, hey, I have all of this information that I got. Do you want me to release it or do you want to give me $100,000 to have it back? And so the policy will step in on that as well. Website liability. Everybody is now expected to have a website, whether they're actually conducting business over that website or they're just using it as informational. There's still a huge exposure for plagiarism and copyright infringement. Again, if they're using it to transact business, there's credit cards and information going through that system that will need to be protected. Non-physical business interruption is business interruption if the cause of a privacy breach. So what you're looking at here is somebody can, again, if you're doing business over the internet or you have a lot of information that you need to conduct your business and somebody sends a virus and it shuts down your system, you can't take orders, that has coverage under business interruption. Now they're expanding, certain carriers are now expanding to the physical business interruption coverage. So what that means is, if as a result of a data breach, Q4 you are normally doing $1 million in sales, but the next quarter after your data breach, because of the bad faith and the poor reflection it may have on your company. You say, we had a shortfall of 30% in sales because of how we're looking because of this data breach. This happened and everybody's information got out and we had to replace all these credit cards or lost orders, and now people don't value our brand as much. They're now starting to reimburse for that as well. Data restoration, again, if a system gets hacked and gets shut down, you lose all your data, the cost associated with restoring that information is available under a cyber policy. Cyber terrorism, it's politically motivated, again, used to cause severe disruption and fear in society. And wire transfer fraud, this is reimbursement of funds after an authorized transfer of money from your bank account to another account. This gets a little bit tricky, and we'll discuss it a little bit further in some of the claims examples, but this is definitely a growing trend in these cyber liability claims. So the overall theme to data security, if you collect, store, or transmit protected consumer data, you have a responsibility to those people to keep it safe. Some claims examples that we wanted to go through, but first I want to start out with some facts and figures about claims. In the most recent study, the average claim payout was $673,000. And so it is a little bit different than a GL or a property claim where a business may be able to take that on and still survive. If you have, and it's easier to identify what your potential for loss is. If you have a piece of property, you know the value on it, if it burns to the ground, you know how much you're going to be out of pocket for that. General liability claim, those can linger on depending on the severity of the accident, but typically the average GL claim is under $10,000. So if you have a uninsured GL claim, you can pay that and still go on with business. By a show of hands, out of the organizations here, if you had to come up with $673,000 tomorrow to pay for a claim, would you be able to open doors the next day? Who thinks they would probably be shut down? So it does have a huge impact on an organization. Out of all the claims that occurred in 2015, 94% were due to an exposure of personally identifiable information. And scary enough, a third of the claims were due to insider involvement. And so that's when I want you to start thinking of, it's not necessarily somebody hacking into my system, stealing my information. Those threats are there, and they are very apparent. They account for another third of the claims. And with a smaller organization, you don't think that somebody's going to hack into my system and steal that information. And more than often, you're right, they're not. But you can't control all of it. Like I said, a third of claims are due to insider involvement. You might think, well, I have the best employees. Nobody's going to steal information or sell my customer information, and you're probably correct. The other portion of that is 2/3 of all of those claims are due to mistakes by employees or a breakdown in communication or business practices. So it's not something malicious, it's an accident. And you can't plan for those, you can't put in certain things to prevent those. So that's why I say the insurance is the last line of defense. You can have the great IT security, but you can't prevent human error. And that's part of what insurance is for. The long-running joke of insurance is you can't deny a claim based on stupidity. And it's true. And you can't deny a claim based on a mistake. So those are the types of things that we see on the claim side that every organization is faced with. Every organization has the exposure no matter what they do. So again, it is a multi-pronged approach to mitigating your losses and doing the correct things, and the insurance side is one of those approaches and a very important approach. What they consider nano organizations, those are firms less than $50 million in revenue. Those organizations were targeted the most. Those were targeted more than 70% of the time in these types of claims. They were targeted also the most with hacker claims. So that when you think, I'm a small organization, the hackers aren't going to be coming after me, 78% of the times they are. And that's because they feel that you have the least resistance. They're going to take the path of the least resistance. There's hackers that are doing it maliciously. There's hackers that are doing it for sport and fun. Regardless of what they're doing, if your system is hacked, you may not have that third-party claim because they may not do anything with that information, but you are going to have that first-party claim. So you are going to have to pay for the notifications. You're going to have to pay for credit monitoring, possibly healthcare monitoring, things like that. But again, everybody is at risk in the claim scenarios. Here's an example of a claim that we saw for a restaurant. And basically what this comes down to, again, it was internal. Somebody had installed a skimming machine in the credit card machine, and they were stealing all the credit card information and selling it. That unfortunately happens. Now with the advancement in these skimming machines, you don't even have to swipe it to have that information stolen. So people can now actually get near their point of sale machine and steal information off their network and download it and sell it. In that case, the owner of that information is still responsible.
Did they win the suit or did they lose the suit?
They always pay.
Thank you.
Yes, they always pay. And most of the time they don't end up in a lawsuit, in court. They always settle, they always have to pay for, because if there's any breach, you're responsible for it.
Does the chip keep this from happening?
It's definitely a protection. It protects it from things like this, but what it doesn't do is protect it from getting into the network and getting the card information, because that information is still going through the system. But it does protect it from, a few years ago, people would have a device and be able to walk past you and steal your credit card information. The chip helps protect that type of thing. So this is an example of when the software was actually hacked. It wasn't an internal malicious attack. It was somebody hacking into the server and stealing the credit card information and the customer information. This is another example of they weren't in compliance with the PCI compliance rules and regulations. So they had, right off the bat, they had the $30,000 for the fine for the non-compliance in PCI. So this one, I think this one is still open, but right off the bat, they had the $30,000 loss. This one may sound familiar. Luckily enough, we did not have this. So this was a contractor who had a contract with a national retailer. And this contractor, what they had to do is go into the national retailer's system to report what they're doing, their hours and billing information, to make sure they're getting paid, making sure they're on time with their project. And the hackers followed that person, that contractor, into the server of the national retailer, and was able to then breach the retailer server, get all of their customer information, and use it to set up steal identities and things like that. And so this was a small heating and air conditioning contractor that didn't have customer information, didn't have a lot of customers, didn't have a lot of employees, so didn't have employee information, but they followed them into the server and was able to gather all this information. That one was actually the target breach. So that's how that whole target breach started, a couple of years ago. This is, this is a small one, but again, everything has an exposure. This was an example of a guy who had his identity stolen. He went to apply for a loan, and he couldn't get a loan because he had a identity theft. So there's all these little things. So he needed coverage for overnighting documents, getting all of this stuff figured out so he can resubmit a loan application. Also, they had to provide a year of credit monitoring. And so this one was a small claim, but again, shows that big or small, they always happen, and there's a huge exposure. Here's a medical office. Again, this was a malicious insider claim. The employee was fired from a doctor's office, and they had a laptop, and the terminated employee basically held the information hostage, but they had to pay for the forensics on what was on the laptop, pay for any notifications, they have to offer the credit monitoring, and now they have to, on the healthcare side, they have to offer healthcare monitoring. So, that's different than the credit monitoring. The healthcare monitoring, the big thing a couple of years ago was, I'm going to establish an identity, I'm going to get your healthcare information, and I'm going to go get healthcare. And it's going to go on your bill. You're going to be responsible for it. And that was very difficult. Credit monitoring and those types of identity claims, those are a pain, but they are not that difficult to overcome. The healthcare risks, when they first started coming out, were very difficult to overcome. They didn't really know how to investigate them. They didn't know how to reverse the problems with the healthcare claim. So they're getting better at it, but it's still a big issue. This claim also had spent $75,000 on a public relations firm, so they wouldn't be forced to have that slow down in business because of the reputation of having a hack. That, again, is still covered by an insurance policy. This is another medical office. And this isn't much of a data hack. This is the website liability that we talked about. And there's lawsuits for libel and slander and things like that occurred in this claim. But as you can see, the claims come in a wide variety of shapes, sizes, forms, cost, but you need that protection because you just don't really know exactly what you're exposed to and how to protect it. This was a nonprofit organization. Again, this was a smaller claim. This was what would fall under the cyber extortion. And so somebody hacked in and stole their information, or was able to shut down their system and said, give me $10,000 or you're not going to be able to use your computers. The carriers then step in right away and help out in those claims. All right, I'll briefly go through USLI's appetite and product. So USLI in general, just to give you a quick background, they're a large insurance organization. They specialize in small to medium-sized business. So that's why you'll see some of the limitations on their appetite. It's just because of what they focus on. Again, there's a lot of other carriers that Gateway works with, that Unlind has access to, that provides a lot of a different focus. So we have, as far as cyber liability goes, I have yet to really see one that we've had to decline unless they've had a lot of claims and no course of protecting themselves. So they will go up to $25 million in revenue, up to 100,000 records or credit card swipes. They have 100+ classes. Here's an idea of who they're looking to cover. A lot of professional offices, contractors, a lot of retail, hospitality, Main Street business. Their policy premiums are as low as $500,000 or $500. That's for a small account with low limits. I would say what we typically see out of a minimum premium is right around $1,000 for $1 million worth in coverage. That's typical. That's probably the limit amount where you want to start, because that's going to then cover you for all of the exposure that you have. As cyber liability becomes more prevalent today, and there's a lot of companies that are new to it that may be throwing a little bit of coverage on to a BOP or your package policy, and so you do see that. You may see some of that on your insurance policy that you already have. You might have $25,000 or $100,000 worth of coverage. I challenge you to really look at what you have, because it does give a false mindset of having cyber liability coverage, and when you have a claim, you're probably not going to be happy with the $25,000 of coverage you have. You're going to be upset you didn't have the other $500,000 to cover. So just keep an eye out for that. Definitely beneficial for you to get a standalone cyber policy. Theirs is a 4-part policy. This is pretty similar to a lot of our other carriers where they break out the different coverages. So there's privacy breach liability, there's privacy breach expense, website liability, and identity theft expense. Does everybody remember the differences between those? Pay on behalf for data breach expense, website liability, theft expense, identity theft coverage for owners. And a lot of the carriers provide these risk management tools, a lot of extra bells and whistles to help you navigate the IT situation, what you do in a loss, how to protect yourself, what are the right steps you can take as a business owner to help mitigate some of these losses. Per Visa, 85% of data breaches occur at small businesses. 60% of small businesses victimized by cybercrime shut down within 6 months. Any more questions? All right, well, everybody contact somebody at Unland and buy your policy.
Why don't you hang up there a second? Because one of the things that is always hard when you start thinking about something like this, you think about your personal exposure, you think about the business exposure, sometimes you're a small business guy, and they're commingled. And so really, can you kind of describe from a business perspective the underwriting process, what you look for, how you vet your companies?
What we look at from an underwriting side, and it's very different on a cyber liability policy because you don't have all the information. All the safeguards can't prevent a loss, and that's more difficult to do. So for small businesses, what we've done and what has been done by some carriers, there's a lot of carriers that, again, are new to the game. There's a handful of carriers that are very experienced, have all the claims data, know how to really underwrite this and know what the exposure is. those carriers are great to work with because they understand there's going to be a loss. I just want to know how much I'm going to pay. So you may be familiar with seeing an application 14 pages long, asking every piece of IT information that probably nobody in this room is going to be able to answer because they don't know. They're going to have to get an IT professional in just to help fill out the application. Great, you now have all that information. What the carriers that we typically work with know, regardless of all that information, if somebody wants their information, they're going to get it. What are we going to have to pay? So we are basically looking at some very broad safety requirements. Is your information, is some of it encrypted? Do you have antivirus software? And basically, what are your revenues? And we have a great program that is designed for small businesses with Hiscox that only asks you the class of business, and as long as you fit into these 5 categories, all we need to know is revenue. So the small business is very different how they underwrite compared to the larger businesses.
Okay, you mentioned earlier ISO, and so we all like to throw these little acronyms around. ISO is the Insurance Service Office and is largely responsible for standardizing coverages. Companies then will file forms or endorsements that work around those. So when he mentioned that ISO had not yet really responded with a standardized form on this, and mentioned manuscripting. Manuscripting is basically each company writes their own policy. Now, early on in my career, I had a little experience with an ocean marine, a true ocean marine underwriter, and manuscripting meant they actually hand wrote the policy. So there are a variety of variables, even though the risks are getting more standardized. How do you evaluate those variables, and how do you give them back to people like us so we can explain it to our customers?
We will typically, number one, we work with only the top level companies in terms of cyber liability. So these are the people that have been around a while, have an established form, have the claims practices, because at the end of the day with a cyber policy, you're buying the claims process. You're buying their services. And so we want to make sure that we're providing a company that has these claim services. The interesting thing about cyber liability and the ability to write their own forms is, you're going to have a wide variety of coverages. So what we do is, when we have coverage comparisons, we do a lot of looking at different quotes that somebody may bring to us and say, why is this one $6,000 and you gave me one for 11? Well, because they're offering this, and this. They're excluding all first party, and this one doesn't. And so we do a lot of that comparison for our customers. The interesting thing about this type of policy, and you mentioned ISO, and the idea behind ISO is they want to get everybody not in a situation that the business owner has to sit down and look through all their forms, or the insurance agent has to look through every single policy on every single risk and decide what's the best. That's great for GL and property because there hasn't been any changes. Now, as cyber liability goes, it's much more difficult because I just went through some claims examples, some from a long time ago, some from that are very new, and an ISO form can't keep up. And so if you start going towards an ISO form, unless they write it so broad that they're not going to be able to exclude anything, they're not going to have all the coverage needed. And we know ISO doesn't typically want to write very broad policies and cover everything. So I don't see ISO really coming up with a cyber form that is going to be sellable.
Okay. One other thing, just, this is just a matter that you wouldn't be aware of, but our past president, Jeff Peterson, never used the word cheap. So everything inexpensive, but there is nothing cheap about what we do here. So from an underwriting standpoint, is there additional information that can help them receive maybe more accurate underwriting if they have a in-house service, IT management, those kinds of things? Does that have a bearing on premium?
On the bigger risks, it can. So if you have a CIO that's doing all these things to mitigate risk, you implement certain practices, it can have an impact on pricing. But again, at the small business level, they try and, again, they rate it as strictly on revenue, and you're going to have a loss, and we want to know how much it's going to cost us, and that's how, insurance is the law of large numbers. So that's, for this coverage, they go by that on the small business side.
Great. Other questions?
Bill, I got a comment real quick. So many of you may not know the relationship between us and Gateway, and what we try to do is align ourselves with specialty professionals that we can count on, basically. So they do a lot of the backroom research on some of these policies, et cetera. So USLI or Beasley or Hiscox, as he's mentioned already, are great companies for cyber liability, and they've kind of been known to have the best forms in the industry. However, they won't contract directly with most agents around the country. What they'll do is they'll go to what they call an MGA, managing general agent, that will then be the conduit between the agent and the carrier, and then the customer. So that's what our relationship is. And so really, outside of the endorsable policies that we have through our other carriers, Liberty Mutual or Travelers, whoever, we utilize them for our cyber, and they've done a fantastic job with kind of just building a reputation for that. So, and I know most of you customers, some have passed, some are hopefully future. We don't utilize this for a selling opportunity, but I will tell you that make sure, and Bill touched on this, make sure that you are asking your professional the ins and outs, differences between one carrier versus the other on these things, because it is important. From a pricing standpoint, I just delivered one yesterday for a revenue size of about 10 million, maybe 120 employees, is between 5,000 and 7,500 in premium. So with a couple of their policies. So take a look at it. It's not something that all carriers know what they're doing. And I would tell you, Bill might disagree with me, I think as we go forward down the road here, there's going to be less and less carriers offering this once claims start happening, and carriers think, I didn't really anticipate paying this kind of dollars out on these claims. So if there is a claim, it's going to be a big one. It's not going to be a $5,000 claim. It will be something more substantial than that. So I think the marketplace right now is pretty, you can get to it pretty easily. But I think as we go forward, it's going to be a little tougher.
Absolutely. Anything else? Yes.
I was just wondering, with copiers becoming more and more sophisticated, and you scan on them and you fax on them and everything, is that an exposure in itself, or?
Yes. We've seen claims come in because you have the large business machines that are scanners, copiers, printers, fax machines. They typically have a hard drive that store all that information. They're typically connected to a network. So if somebody hacks in, they can realistically get access to anything that was scanned, copied, or faxed.
Who backs the insurer? And if the insurer doesn't have any backing and they go out of business, who's responsible to the client?
Most of the insurers are backed by reinsurance companies. They have reinsurance treaties with large reinsurance carriers. You'll see that more so with the new carriers because they don't want to take on that loss all to themselves because they're not 100% comfortable in what they're doing. So, with a new product for a new insurance company, what they'll typically do is retain 10 to 20% of the risk and then get the remaining 90 to 80 to 90 under a reinsurance treaty.